What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the SPY, the Nasdaq, the QQQs, the indices, break down what the charts are telling us and what you should be watching for the future, and why you should be very cautious during a time like this. And before I break anything down about this, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $3,000. And the best part is any could be a free Tesla share. It's a limited time offer. The offer ends in just 2 days. It has been extended. Check it out before they run out. With that out of the way, let's get on with the video. SPY was up 1.41% for the day on Friday with a very monstrous push to the upside, getting almost to 410, and SPX actually reached 4100 plus. Pretty crazy stuff overall because of the fact that we had a crazy ton of puts expiring on Friday. And as a result of that, we saw a massive short squeeze. It was also the end of the quarter. Lots of Wall Street and hedge funds wanted to actually pump the markets to make their balance sheets look a lot better and also to get those bonuses. So a lot of things were going on. But the real question is this going to continue? Are we about to just rip to the moon, or are we about to get a pullback? Now, when it comes to the data, we don't really have too much coming out. We have some PMI reports and also manufacturing data with a Fed speaker later on. Nothing way too significant on Monday. Also for Tuesday, we have JOLTS job openings. This will be very important because it affects the Fed's policies. But besides that, right, not a whole lot's going on Monday. I also want to note that this week is going to be a relatively short trading week, only 4 days, because the market's going to be closed on Friday due to the fact that it's in commemorance of Good Friday. And when this happens, right, we actually tend to see less volume in the market overall. So I'm not expecting it to be as insane. Now, looking at the options chain, I just want to note that for this week, the options chain is just not as crazy compared to last week, right? This is important because now that that's the case, the market makers do not necessarily have to pump the markets as hard as they did last week. And also, if you look at Max Pain, it's actually around on around the 400 to 401 area, so it's not as crazy. And all of this is basically suggesting that the market could afford to actually pull back a bit and won't really hurt the market makers that much. There are also not too many of the puts expiring. That's super important because now we are in a position where we could see the market pull back a bit as long as we don't see way too many puts opened at once. So what does this tell me about the market for the week? Well, I want to note that from a technical standpoint, we are actually developing a potential bearish divergence. I just don't know if we're actually done developing it and we're about to like pull back a bit, or if we are still in the process of doing so, which means that the market will most likely either pump a little bit more and then drop, or we might just drop from here. It's most likely going to be one of those two. Now, when it comes to the bigger picture of SPY, this is something else you have to remember. If I hide my drawings, there is actually what's looking like a possible giant head and shoulders that's developing on SPY. This could be like our left shoulder, the head, and this could be a right shoulder that's developing, which would mean that we could come to a slowdown very soon. I don't want to necessarily say anything about it just yet, though, because we need confirmation, right? If we want to invalidate this overall structure, we have to break the head levels, right? If we see SPY break above like 417, 418, 420, if we manage to just keep flying, we're going to invalidate this and this will not necessarily play out. But if we fail to break these highs around like the 418 to 416 zone, and we just start shopping around here, then it becomes a real possibility that this could end up playing out and we could see a massive pullback in the market. Once again, it looks like this. I think if I cleared this up, it's going to look a little nicer. So it looks like this basically, right? A clear left shoulder, head, and maybe a right shoulder could be developing with a slanted neckline. Now the question is, what's going to happen going forward though? I want to note that the RSI on SPY, it's basically developing this bearish divergence. The RSI is very overbought on the hourly at 79. That's the highest we've actually seen it in a very long time. Now, if you look like right here, during these highs when SPY was around like 415 to 410 or so, we saw the RSI in the 50s at one point. We also saw the RSI reach a peak of 78, 78 all the way during the Powell pump to 418. And currently the RSI is at 79. So the stock is making a lower high, right? Right here, it's declining, but the RSI is actually technically making a higher high, getting higher and higher over time. And it's actually higher than where it was at these levels. That is suggesting a bearish divergence, which means the market will most likely either pump a little bit more. I just don't know if it's done forming or not. So it could pump a little more and then drop, or it's just going to drop from here and just pull back a bit. Now, there's also no confirmation that the market's about to like crash right now. As of right now, I don't have the like catalyst or the trend in the data to suggest that. This could just be a pullback. It's likely just going to be a pullback, and we're likely going to establish a higher low for the time being. And we might just continue to maintain this bullish stance for now. Because right now, the bullish indicators have not been invalidated. On the MACD, right, the same thing is actually happening. If we actually close out our RSI and just look at the MACD, once again, the signal line where the PPO is and the MACD are actually a lot higher than where they were during this rally, the rally right here, and also these levels when SPY was all the way up around like 410 to 416. We're very close to these levels, all the way up to this like 418 peak, but we're actually not necessarily there entirely. So there is technically a bearish divergence developing. It's just not perfect because of this peak right here. But overall, the signals are looking like they're quite overbought, and we are due for a bit of a pullback. So what does this tell me? We also got this rejection of this potential bear flag that developed. So that's once again suggesting the market may pull back a little bit. So in my opinion, we're most likely going to either pump a little more and then reject, because we do have this chop zone that's coming that's around this like 410 to 412 area. We clearly struggled to really break out, get a strong break above this in the past. So we're either going to just retest that and then drop, or we just reject off 410 and then just start to pull back a bit, start filling some of these gaps, getting down to like the lower 400s. The odds do heavily favor that. I also want to note that the market has been pumping on very low volume, right? It's been artificially pumping because of short covering, and also because they're pumping it to once again boost their balance sheets. So once again, it looks like the odds are favoring either we push up a little bit and then drop, or we just straight up, pull back and establish either a higher low, or we just cool off from here. Now, where may we cool off to? I just want to note we could look at this from many different perspectives. I'm going to try to use the Fibonacci retracement over my current trend lines. Hopefully, this is not too distracting. I hope it's not too crazy. But either way, the 0.236 is around 403. The 0.382 is around 398. We could come all the way down to fill this gap down here is what this is suggesting. So I'm going to be watching this like 403 level very, very closely. We could see us come all the way down there over the next couple of days. Once again, either we pump up and drop, or we just drop from here. On the QQQ, overall, this thing is just ripping to the moon. I'm not sure it's going to like drop as much as SPY may, because of the fact that consumer discretionaries are holding up nicely. We had deliveries that came out for the Chinese EVs. They were pretty mixed. I think half of them were kind of like underperforming, not that great. NIO did okay, not too awesome though, considering they barely did 10K deliveries and barely met their goals. But Tesla, I'm actually recording this before Tesla's deliveries come out on Saturday, so I apologize that I don't actually know the truth, but I do believe the odds favor Tesla doing well. And if Tesla pumps, which it most likely will, this could still help the QQQ to some degree. So the QQQ to me looks like there's no like confirmation of it getting rejected. It's either going to pump more and then reject, or just start cooling off a bit from here. It's got to be one of those two most likely. But so far, we just don't have the confirmation we really want. Looking back on the hourly time frame, I have to go really far back because of how overextended this thing is. It's pretty insane, actually. Looking at the daily, I'm just going to start with the daily, then the hourly. On the daily charts, we're not actually getting. We technically still have potential bullish divergence. Technically, it was developing like right here, where the chart made this higher low and this actually made a lower low. It's playing out. I just don't see signs of it like dying just yet, so it's a little bit harder to predict, and it still looks relatively strong. But I just want to note that it is still overextended. The RSI is almost around these very high 70 levels, very close to 70. And every time the RSI gets very close to 70 or like 68 to 69, we see it actually reject and slow down a bit. So the odds do favor the NASDAQ and the QQQ slowing down a little bit, just cooling off a bit. The RSI is at 79 right now, right? That's pretty crazy, quite overextended. And we are still at this crazy high level. We're at the highest we've seen this thing in like many months. So it's going to take a while to actually see how that plays out. On the weekly, right now, I'm not seeing much of a divergence, right? It's not actually showing much of one. We do have a potential weekly bearish divergence right here, around this like 50 levels where the RSI was. We're currently at 62, so it technically has one, but there's no sign of it just being like done yet. Looking at the MACD, the MACD is not suggesting that. Only the RSI is, so very mixed signals for the QQQ. But like I said before, it is overextended, so a bit of a cool off would be completely normal. I think we have some gaps down here. Somewhere down here, I remember there being a bit of a gap. There is one all the way down to this 313 level. I mean, that is a big drop. I don't know if it's going to drop that much, but I am anticipating that this thing might cool off and come all the way back down to this 318 to 315 area going into the next couple of days. That would be completely healthy. It might not drop as hard as SPY does, thanks to Tesla and consumer discretionaries and other tech stocks, but I think that's very likely. Now, on the VIX, we're actually seeing the same thing developing. The VIX is quite oversold. The VIX is starting to show some strength, right? The VIX was looking very weak here, but you could see right here it dropped to like 18.5 and then kind of bounced off that. To me, it looks like the VIX might try to get back to the like 19 to 20 zone, and then it might reject one more time to make a lower low. And that could be establishing the top of this rally. And I believe the VIX is due for a bit of a bounce. So maybe it's going to bounce and that's going to happen because of the market dropping some. And then it rejects later on, coming all the way back down for the market to get another rebound, right? So I'm basically anticipating the market cooling off a bit, then maybe bouncing later on. And I think that's most likely going to affect the whole market collectively. Amazon, it's a little bit overextended. 64 is where the RSI is at. MACD is still open. Not a whole lot right here. 103.5 is the major resistance. It pumped very hard in a very short period of time, and we do have these gaps down here. The odds do favor Amazon either pumping more and then dropping, but we did lose some momentum on the MACD on the hourly, so it might come down to fill this gap very soon over the next couple of days. That would be completely normal, completely fine with me. I also want to note that for Tesla, I'm still in the middle on Tesla. Because of the fact that deliveries have not come out at the time I'm recording this. If deliveries are not that great, right, Tesla could come down to fill this gap. If deliveries are awesome, Tesla's most likely going to continue to pump, and we could see this thing go all the way up to the 220s. One thing that's crazy about Tesla is even though it's overbought, this thing could just keep ripping. It's a monster, and shorts could get squeezed like crazy. Lots of retail love to buy it, and we got this breakout out of this like very tight wedge that was developing, and it could most definitely continue to rocket, get closer to the 215 to 220 area if we get a very strong deliveries report. And I do think the odds favor that, seeing the fact that the numbers look really good in China, in Europe, and possibly the USA. I'm not as sure about the USA, but I am very confident about China and Europe. And the reason why I'm confident is not because I'm just BSing you guys. It's because of the fact that Tesla has a history of constantly beating and beating and beating. We're consistently seeing lots of growth from the company, and they have a tendency of surprising almost always on those deliveries, right? Beating expectations. So I'm very optimistic. I think they're going to do well, and I'm really hoping this helps the share price continue to pump. It seems very likely. Nvidia wasn't that hot going forward. We do have a potential bullish structure right here, a potential bullish triangle that developed. So I don't know if it's going to pump a little more to like 280 and then drop, or if it's just going to drop from here, retest like 275 or so, maybe come all the way down to 270, then try to bounce later on. It's most likely going to be one of those two. My only problem with calling a potential some downside in tech is we're not getting too many signals suggesting we're ready to just start dropping yet, but it is very possible on some of these tech stocks. Now, I'm thinking NVIDIA is most likely going to either retest 280 and then drop, or it's just going to straight up just start tanking from here temporarily, just get a pullback to cool off. The RSI is very overbought around the 71 area, and the odds do favor it actually retesting maybe the 50 EMA, maybe coming down to 270 to 268 or so. We have this gap down at 264. It would be completely healthy for us to cool off a bit, and the odds do favor that. So we'll just have to wait and see how it goes, but I just wanted to note that. Apple right now, all right, it's pumping really hard. It got to 165. My target was around 163.51, a little bit higher. I'm not sure if Apple's going to try to get to this 166 and then reject and start dropping a bit to start filling some of these gaps, or if Apple's just going to drop from open. That could also happen. There's a gap down at 160, another one down here in the like very high 157s. That's also very possible. 157.5 is a strong support. Either way, I do see Apple potentially coming down later on, whether we pump more and then reject or we just reject from here. It seems more healthy and seems more likely considering the fact that on the hourly, Apple's RSI is at 80. AMD, same thing. It might pump to try to get to 100 and then reject, or it might just start cooling off from here. The hourly MACD is showing some signs of weakness. RSI is kind of, it's just going sideways from now. I'm not really seeing a divergence. This thing does look like it's going to cool off a little bit. It's losing some momentum. It's already starting to cool off. We could get to the mid 90s very, very soon. I wouldn't be surprised, in my opinion. Finally, for Google, it actually reached my target of 103 to 105. It reached it. I'm not sure if Google's going to try to pump to fill this gap one more time and then reject, or if Google's just going to cool off and come all the way back down to the like 100 area. It's most likely going to be one of those two. I will give you guys more insights on it later on once we get more information and data. But once again, I do believe the odds are favoring this thing either pumping a little bit more and then cooling off, or if we just straight up cool off from here, because I do believe it's overextended. Meta pumped pretty hard on Friday. We actually broke above resistance around this 212, closing around 212.17. Very, very strong move by Meta. It was a very nice runner for the week. On the daily chart, I just want to note that the next important level I'm going to be watching, if this thing does try to continue to rip, is going to be very close to this like 215 area. I remember I was eyeing 215 right about here. It's actually 214. About 214 is the next very important resistance. It actually tends to get rejected between 214 and about 218, around there. So this could be the area of rejection for Meta right about here. So in my opinion, Meta's most likely going to just try tanking from here just to slow down, or it might pump to this zone right here, this like almost 214 to about 218 level, come all the way up here, drop a little bit, then cool off and start filling these gaps. But I believe the odds favor it eventually cooling off and filling this gap down around 200 before it establishes a higher low and it continues to go from there going into earnings, right? For Netflix, I'm anticipating that this thing will also cool off a little bit. It actually entered this rejection zone I had right here. I didn't really extend this by mistake, but right around here, around this 142.5 to about 146.5 area, we have a tendency of seeing it getting rejected. So I do believe Netflix could either pump a little bit more, maybe try to get to almost 350 and then just drop from there, or it might just continue to drop, start filling some of these gaps. Most likely it's going to come down to the below 340 area, and we're most likely going to see a bit of a cool off. Finally, when it comes to the 10-year Treasury yield, this thing is, once again, getting very close to filling this gap down here. But in my opinion, I'm thinking it might try to bounce off this 34.68 level. It might come down a little bit, the market like pumps, and then this thing bounces one more time, forming an inverse cup and handle, right? That's very possible. It could look something like this, right? We have this cup-like formation that looks like this. Actually, hold on. It's going to look a little bit different. It might look like this, where we have almost a cup forming, but then we bounce, which drags the market down just temporarily. And then we complete it by coming down to fill this gap. And this is when the market gets the final push, maybe a little bit later on. Something like this could form on the 10-year. If that's the case, that's likely going to negatively affect the market temporarily. Now, once again, we could come down, bounce off here, and that could be when the market rejects and starts to cool off a bit. Then it comes right back down to fill this gap. That's when the market could get its final pump. And then what happens later on, going into like mid-April, is going to depend on the bank earnings and many other tech earnings, and big tech earnings especially. That's going to be very telling about the economy. We'll just have to wait and see how that actually goes. Let's just be patient on that. We also have CPI in about a week and a half from now. Finally, last but not least, the dollar. I'm kind of in the middle with the dollar. It's still just shopping around this like 102 zone. The dollar looks like it tried to bounce off this, so I don't know if it's going to just try to pump one more time to get to like 103 or so to drag the market down. The Nasdaq in both SPY, but particularly in the Nasdaq tends to be heavily correlated, uh, inversely correlated with the dollar. So I'm thinking if it bounces, this could be negatively affecting the markets. Then it could come right back down. Once again, helping the markets pump one more time before the dollar reverses off the tightening financial conditions by the Fed later on. When the dollar gets a breakout, the big breakout comes in the future, right? It may take a few weeks, but when the big breakout comes, that's going to be bearish for the markets. We're not there yet, so we still have some time for the market to still hold up. Could we get a pullback? Sure. SPY may get a pullback. The market may pull back a bit. Sure. But that does not mean it's crashing. There's a big difference, right? I'm not seeing the market crash as of right now. I think a pullback would be healthy. But until then, we should be establishing a higher low and just continuing for the time being. And we'll just watch the news and see what catalysts come. All right. So thank you all so much for listening. Have an absolutely incredible rest of the day. And I'll see you guys in the next one. The market to the moon because the long-term future is still incredibly bright. And peace out.